Singapore's non-oil domestic exports continue to gather steam. They grew by 7.7% last month. That's up from July's 5.9%.
Experts say August's growth was slightly above their expectations. They point to non-electronic goods as being the main driver. Demand for such goods rose by 8.3% on year, boosted by items like gold, specialised machinery and raw food materials. Economists say electronic goods were also in demand and they expect it to be a growth driver in the months ahead. The cluster increased by 5.7%, doubling last month's sluggish 2.8%.
Singapore it is benefiting from some of these global work-from-home policies, which has raised demand, especially for semiconductors, from data centers as well as cloud services, as well as personal computers. So the strength that we saw in August numbers actually came also from semiconductors and personal computers.
Exports to the US took a nosedive from the nearly 99% growth in July to level off at slightly above 14%. But exports to China and Europe bounced back from the red to double-digit growth. Analysts say it's a signal that trade is normalizing as pandemic measures gradually ease.
When the China consumers start to demand for more goods and services, I think it's a good sign for Singapore because our economy continues to be quite reliant on that. And in terms of Europe, I think the overall economy is still undergoing some recovery. But overall, the good part is that a lot of these economies are emerging from the respective lockdowns.
Economists believe Singapore exports will remain healthy and even support GDP growth, even though the contribution may be modest. But they also caution that US-China relations and domestic lockdowns could put a damper on Singapore's exports ahead.